Hey, so today's trade review is going to be on GBP/CHF. So let's break it down. Let's get into it. First things first, we got to navigate over to the free Discord chat room. If any of you guys want a link to the free Discord chat room, there's going to be a link to that in the video description. 100% free, doesn't cost you a dime to join this chat. And every single day, I post my charts in here. I post my analysis in here. I give all kinds of different plays in here. So feel free to join that. So right here, you can see I posted it yesterday because well, yesterday when I posted it, it didn't trade down into that higher time frame level yet. So we had it on the watch list, but it wasn't ready yet. This morning it was ready. Okay, why was it ready? Well, if you look up here, what did I say at 6:02 a.m. Eastern time? GBP/CHF. This is one from the other day. Now we got our reaction off of that higher time frame level. And what do I mean when I say reaction? All I mean when I say reaction is a lower time frame shift in market structure off of that level and our fair value gap confirmation. So I said reaction being that fair value gap and shift in market structure. High alert on this one today. So this was my main watch coming into the day. You can see right here I said GBP/CHF main watch, and that's the one I hit. All right, so now we're over on the chart. So we're going to start from, as always, we're going to start from our higher time frame and we're going to work our way down. All right, little top-down analysis on this thing. So GBP/CHF, what is the market structure? Market structure is bullish on this, okay? So originally we had that shift in market structure right here. See how we broke that swing high level? That represents what? That represents a shift in market structure. On this ramp up, I want you to follow my cursor. This big ramp up right here. See that? Boom, big ramp up, broke that swing high, shift in market structure. Now, it's not 100% confirmed yet though. What do we need next for it to be confirmed? Well, we needed to pull back and put in a swing low level. So you can see price right here. See how it pulled back into a discount marketplace below 50% equilibrium of that leg up. It pulled back into a discount and it put in a swing low level. See that? So we put in a swing low level right there, lowest low in the middle, two higher lows on the left and the right. And then boom, we get a nice leg up higher, breaking that high. So at this point, we're 100% confirmed. Market structure is 100% bullish. And it's trending up at this point. It's a confirmed uptrend on the daily chart. So that's all we had to do on the daily chart. Bias was bullish, market structure bullish. Good. So we're trading with the overall tide, the overall trend. So now our higher time frame level was on the 4-hour chart. It wasn't the best higher time frame level, not the prettiest higher time frame level, but still a higher time frame level. Okay. So right here, this is that 4-hour bullish order block. See this? We're going to mark the body of the candle because that's where the bulk of the volume is. So right there, see that? Look at my cursor. Look at where it's moving. See that? That is your 4-hour bullish order block. That is a higher time frame level of support. Okay, so you can see right here we had this big ramp up. See that? Cracking that high right there. Then price pulled back into a 4-hour discount, which is key. We wanted to pull back into a discount. It pulls back into a 4-hour discount. Test that level. Boom, you get a nice big explosive move, right? So now this is where we utilize our lower time frame chart to see if we got that confirmation. Okay, we utilize that lower time frame chart to minimize our risk, to be safer with the play. We didn't get it on the 1 hour, I don't think. Yeah, not on the 1-hour chart. We had it on the 15-minute chart. So right here. So I'm going to put in some data dividers real quick so we can just clean up this price action a bit. All right, so now we're just on a 15-minute chart. You see this horizontal blue line right there, so don't get lost. That is our 4-hour bullish order block just displayed on a 15-minute now. So you can see this morning, see how price, this is midnight. This indicates where midnight was. So we come after midnight. What's after midnight? London session. The London session, we kind of chop around a little bit. We come up, we take out this buy side liquidity. So right here, you can see price came down. It came down. It took out this low right here. What's beneath that low? Sell side liquidity, sell stops. It comes down, takes out those sell stops, test our higher time frame level of support. What happens? Boom, big move off that level. That's what we call a reaction, a lower time frame shift of market structure, because it came up and it broke high of day. All right, so you remember the video I made on market structure shifts versus stop runs, one of the most recent videos I did. Where was that key liquidity pool? Where's the key liquidity pool? High day. Just because this is London session high. So we come up during London session and we cracked that high right there. Okay, we cracked London session highs. We created that fair value gap confirmation, which is key as well. Because remember, whenever we're dealing with a high probability shift in market structure, we want to see preferably a strong close above the level. We got it right here. See how this candle closed really strong above high of day, but we also created that fair value gap. See that? Yeah, we got that fair value gap in there. That's our confirmation. We took liquidity, tested our level, boom, nice reaction, cracked high of day, created fair value gap. What do we want next? Because so far, what have we concluded? Well, on the daily chart, we concluded that we are operating 100% within a bullish market structure. So we're trading with that higher time frame trim. We're trading with the higher time frame tide. On the 4-hour chart, we have now pulled back into a discount marketplace below 50% equilibrium of that price range. We tested our higher time frame bullish order block on the 4-hour chart. And now on the 15-minute chart this morning, we got a reaction with our fair value gap confirmation off of that level. And it's also, as I've said so many times before, it's also best if you have the influence of a London session backing you. We have it. We have the influence of London session backing us. Okay, because right here you can see coming into New York kill zone, 7 o'clock a.m., which is where I hopped in. Like as soon as 7 o'clock a.m. came around. And we came down and took out these sell stops. That was my entry. So as we were coming down, taking out these sell stops right here, tested this bullish order block right here. London session was confirmed bullish. It was confirmed bullish. The trend was bullish in London session. That's where we had that shift in market structure. That's best. It's always best if you have the trend from London session backing you. It's always best because you got that. You're essentially piggybacking that momentum. You're piggybacking that momentum off of London, and that's always the best play, or more times than not, it's the best play. And then, so yeah, like I just said, I entered once we came down. We took out these sell stops right here, back down into our fair value gap zone area. Still didn't completely rebalance it on that second push lower, but we don't need it to. My full PT on this was these highs right here. Okay. Now, I knew it was kind of a stretch, and I really don't like taking trades whenever we got 8:30 high impact news. It's not ideal, but I decided to shoot my shot with it, and that was my PT. It was this previous day's highs because that's a key buy side liquidity pool. Okay, my stop on this was low of day. Okay, it's the low of the fair value gap, but also the low of the key liquidity run. That is the absolute best place to keep your stop when you have both of them. Again, underneath the fair value gap, because if that was the low of the fair value gap, that was the low of those 3 candles that make the fair value gap. But it was also the low of that price swing of that key liquidity run. That is your absolute best place to keep your stops when you have all of them. Okay, so that was the stop. PT was previous day's highs. Obviously, it didn't get there, and I bailed just a couple minutes before the high impact news at 8:30. So I just locked in my gains. I was content with it. I wasn't going to hold through it. It really didn't have that big of a reaction like when the news came out. But still, it's not something that you want to... It's news like that. News like that is not news you want to mess with. Okay? Because it can get crazy. It can get unpredictable. And it's not going to... Many times won't respect that technical analysis. I don't care what anybody tells you. It's a dangerous game. News is a dangerous game. Some of you might be thinking, well, I got a stop loss in, I'm safe. Nope, that stop loss isn't going to save you in that environment. It's not going to save you. That spread's going to kick in and you'll take a much bigger loss than you wanted. So news is not something you want to mess with. Sometimes I'll hold through high impact news, but like if it's not correlated with the pair that I'm trading and it's not like something crazy like CPI, but when you got high impact news like this, like we had today, it's best to be out of the market completely. Okay, so I was green overall on the day. I'm content with it. It was a nice setup. I mean, it had basically everything that I wanted. It was just the news. The news I had to follow my rules and bail from the news. And well, what do you know? Shortly after, it did end up selling off, taking out these lows here. Still bullish overall on it, but right now it's just kind of it's kind of indecisive right now.